Traders, I gotta be honest with you guys. And I know hearing the word honesty in the day trading world, you don't know necessarily what you're getting. And that's why I like coming out with these videos, because it's an uphill battle. I like to fight it, but it's an uphill battle. In this world, there's a lot of junk out there you gotta avoid. And honestly, a lot of the slimy people out there, they live by this motto: it's easier to deceive people than convince them they're being deceived. It's quite an uphill battle, but I love being honest with you guys. I started trading 5 years ago, and there's a lot of stuff I've seen and gone through and heard and witnessed, and I just want to be honest with you guys. I'm going to share with you 3 things I really think you need to hear that you're probably not going to hear from anyone else, any other guru out there, but things I really think you need to hear. So stay tuned. Let's get straight into the video. The difference is there's the unpopular opinion, which the 90% of people gravitate towards. Then you have the popular opinion, which is where the 10%ers reside. So we're going to be jumping into 3 key areas where the 10%ers reside here today. Number 1, you hear out there a lot that you are just one trade away. One trade away from $1 million. One trade away. That's all it's going to take. All it's going to take, and you're going to be a great trader from here on out. There's a big problem and misconception with that. I mean, the whole statement is just completely flawed and untrue to begin with. You're never one trade away, and even when you become a consistent trader and you're trading very well, you're still never one trade away. It's all about consistency. That's what it's all about. If you had to kind of wrap up trading into one word, it's consistency. That's what it is. Once you're consistent, you can grow, but you never want to put all your chips into, one hand. So this one trade away is a flawed mentality that a lot of gurus like to influence newer traders with, and traders with small accounts, because they kind of need that home run hit to get their account started out, versus just taking their time, taking it slow. It's a process. You never one trade away. In fact, you never make it with one trade. I say this a lot. You never make it. You're always making it as a trader. It's all about consistency. Consistency is the number one thing in trading. Guess why? Because when you become consistent, all you got to do to make more money is add zeros to the end of your order. Now, pay attention to this. This one thing I've seen in a lot of traders, and it's a bad idea. Even experienced traders sometimes mess up with this. So be very cautious of marrying stocks. You never want to marry a stock. You can get in big time trouble if you marry stock for any reason whatsoever. The technicals, you love the technicals. Oh my goodness, it's a beautiful head and shoulders. Don't marry it. You marry the fundamentals. It's an electric vehicle company. I gotta buy it. You have to be careful of marrying stocks. It can turn very bad very quick, because once you marry a ticker, your judgment is clouded by this ego, by these emotions. Trust me, traders, your ego doesn't know how to trade. Remove ego from the picture. Every time I come in my office, I see a sign that says your ego doesn't know how to trade. Don't trade your ego. Trade the chart. Trade the price action. Be very pessimistic with your losers and optimistic with your winners. What does that mean? Well, it means very simply, quite honestly, what Mark Douglas said. Be rigid with your rules. Flexible with your expectations. Flexible with your profit expectations. Guys, be very careful of marrying stocks. Never do it. Never do it. Be flexible with the profit side. If a stock wants to keep making you money, just let it keep printing. Scale out of your winners along the way. But never marry a stock that you never cut it. You're adding into it. You become a long-term investor when you were just planning on scalping the trade. It can happen. Never marry a stock. Number 2, time is your best friend in the market. This is absolutely true. It's an unpopular opinion. Again, this is my video today. Unpopular opinion. A lot of people are probably going to hate it. A lot of gurus especially. What do gurus want? They want you to be your best friend. I'm your guru. You're one trade away. If you just join my chat room, going to the moon, baby. Get them space boots on. It's not right. I've been training for 5 years, and time is your best friend. You got to put in the time. After you've been seeing charts every single day forever, when you've seen the same chart unfold thousands of times, it kind of enables you to see the future a little bit. You want to see the future? This is kind of a way to do it. When you see charts every single day, time becomes your best friend in the market. Experience, above all else, experience is your best teacher in the market. Nothing else. No teacher out there. Experience. Experience over time. I think everyone should learn from everyone if they can. Learn from every trader out there, but you have to develop your own edge, which leads me to number 3. Don't trade randomly. Trade your edge. And I know when you're first starting out trading, this is what you're going to have to do. You're going to have to figure out how not to trade in order to figure out how to trade. But over time, you're going to learn what works and what doesn't work, and then you're going to stick to what does work. I have a list of rules on my whiteboard, and I stick to them. I adhere to them. Why? Because I learned what doesn't work, and then I wrote that down, and I don't do that anymore. I stick to my edge. Stick strictly to the edge, and don't drift away from it. For instance, one of the rules on my whiteboard is no more than 2 losses per ticker, and I've been very disciplined with that. Why is it? Why did I put a rule like that on my whiteboard? Because when I first started trading, over trading was a thing, and revenge trading was a thing on certain stocks. So a specific ticker I take a loss on, I'm going to keep hitting it until I get my money back. This stock took my money, I'm getting my money back. That's the wrong mentality. So right now, I take no more than 2 losses per ticker. I'm done with it. Moving on. And that pretty much flows into the rule about don't marry a ticker. Don't marry tickers. This is the reason why. You can dig yourself very deep in a hole if you do it. And I learned a long time ago, I'm in control of the shovel. I can either keep digging deeper and deeper into a hole, or I can dig my way out of it. And so you need to create rules to help dig your way out of holes. Those are going to be the 3 things, guys. Make sure you hit that like button if you can, because a lot of people are probably going to dislike this video. Unpopular opinion, but I think this is really going to help you guys out with your trading career and trading journey. Thank you very much for watching this video. Hit the like button, guys. Hit the subscribe button. Leave us a comment down below. Add another one. Add something else that you got to be honest about as far as day trading goes. Would love to hear from you. Love you guys. We will see you first thing in the morning.